Stocks make their largest moves on news outside of the normal market hours. And in this video, we are going to go over how to trade outside the normal market hours, how to find the stocks that are having this news, and I'm going to give you the strategy that you see taking the trades on the chart behind me here. Hit the like button if you're excited, and let's jump straight into it. Step number one, how do you trade pre-market and after hours? If you didn't know, the stock market's hours are from 9:30 a.m. Eastern Standard Time to 4 p.m. That's when the stock market's open. But pre-market starts at 4 a.m. and after hours doesn't close until 8 p.m. So that 4:30 to 9:30 bracket of time, that's called pre-market. And then the 4 p.m. to 8 p.m. bracket of time, that's called after hours. And very, very often, that is when stocks are announcing news. They don't typically want to announce news during market hours. Not that they never do. Of course, that does happen. But typically, it happens in the lower volume periods of pre-market and after hours. So how do you go about trading those times? Because it's not like trading normal market hours. As you can see from the intro, we have opened our active trade window here. I'm going to click into this cog, and then I'm going to look up the TIF button. And when I double click this, it's going to be added here. TIF stands for time and force, and it is defaulted to day. And what day means is you can place orders from 9:30 to 4 p.m., right? If you are wanting to trade pre-market or after hours, you have to switch this time and force to EXT. This stands for extended hours trading, and you can now trade pre-market and after hours. But secondary thing with this, in pre-market and after hours, there are no market orders. You can only trade with limit orders during these times. So you would also have to come in and instead of buy and sell market, you'd have to set up your buy, ask, buy bid, sell, ask, and sell bid. You'd have to get those set up as well. But that is how you trade after hours trading. So that's how you trade after hours. And that's step number one of this video. Step number two, how do you find stocks that just got news? How do you find stocks that are trading? Because all this is fine and dandy. You can have the strategy, you can know how to trade it. It doesn't matter if you can't find the stocks that are moving, right? Couple of solutions. I have an after hours scanner that I have personally coded and made available, of course, on my website. It is called, I'm looking for after hours. It is called my pre-market scanner, I call it. And this shows you any stock that is up over 2% in pre-market, which is great and dandy, but a downside to Thinkorswim scanners is they only update once about every 3 minutes. It's not exactly live. So in order to stay more on top of live, like news that literally just came out, stocks that literally just started moving, I use an external source. I use Zendo, however you pronounce it, on however you pronounce it on YouTube. They live stream a stock scanner every single morning, and I use them. Obviously, free YouTube screener. There is plenty more that do this, not just Zendo, but they're the ones I use. So they're the ones that get my shout out right now. But either use them or go on YouTube and type in free pre-market scanner and find one that is running real-time data. Third part of this is that data is almost always, not always, there are times where news will randomly come out, but almost always is announced at the top or bottom of the hours. So if you can't just sit and stare at the markets from 7 a.m. to 9:30 because you're at your job or whatever, at least be looking at 7 a.m., at 7:30, 8 a.m., 8:30, and 9 o'clock. If you're looking at those times, you are going to be able to catch most of the news moves. Once again, not always, but top and bottom of the hours are normally when companies announce news. All right, so let's jump into the fun. Let's jump into the strategy, my custom coded strategy that you see running on the chart behind my head here. Just like all my other custom coded strategies, it is, of course, available on my website, daytradingstrategies.net, along with the watch list, along with all of my other code, all available for download over there. top link in the description down below. But in this video, we're going to go over the code to this strategy directly. So let's go ahead and hop into the code and talk about what this strategy is doing. So this strategy, first off, using $5,000 positions, is looking at the highest point of the last 100 bars. So it'll only buy, if you notice, that is one of the setup calls is local high. It will only buy if the close is over the highest point of the last 100 bars. So really just blue sky breakouts, making recent all-time highs, right? Timing is just set to only buy in pre-market and in after hours. This strategy is not used during market open, once again, because typically stocks aren't moving in the same sort of way as they are during market open as they do in pre-market. They're not getting the big news. And that's another subjective parameter of this strategy as well, right? Unfortunately, Thinkorswim won't allow you to code in ThinkScript, hey, only buy if there's if there's stock impacting news released within the last 2 hours on the stock, right? You can't code that in. So that's something that you need to check. If you can tell down here in the bottom, I have my live news module turned on my chart. So make sure before you take a trade that real impactful news has actually come out on the stock, right? Because there's plenty of times where this strategy will take a trade, but there's not actually news, so it's not actually the setup. So just talk about that as well. Setup. Volume is greater than the highest volume of the last 20 bars. So volume is making recent highs and the price is making recent highs. Close is over the highest point of the last 100 bars. And then liquidity is that volume is greater than how many shares you want to buy times 5. That just means if you're looking to buy 10,000 shares of something, if you're looking to trade a 50-cent stock and it has only traded 20,000 shares, even if it's like the setup, even if it's the highest volume, even if it's the highest close, you're still not going to buy that because there's not enough liquidity for you to get in. If you try to buy 10,000 shares on something that only traded 20,000, you are going to get awful fills. You're going to move the stock yourself. It's just not going to work out very well for you. So this is a kind of liquidity check I also have built into this code. So that's your buy conditions. Your sell condition is to sell the first candle that makes a new high, and buy is not true. Let me show you what that means, because here your buy condition is true, right? You got a bar breaking over the highs and you got volume breaking over the highs with enough liquidity to fill you on 1,748 shares. So it's a buy. Then this candle, your sell condition, remember, is high over high if not buy is true. So you got your high over high, but you also got your ascending volume. So once again, you got highs over the highest point from 2 bars back, and you got volume over volume. So this is another buy candle. So instead of selling, and I'm going to show you how to set this up in just a second because this is a TOS setting. Instead of selling, the code runs again and buys again since the buy condition is true again. And then same here. You're continuing to get ascending volume. It's got high over high, but you got ascending volume, so you're good. This candle's a little weird. This candle, you didn't get ascending volume, which would normally be a sell, but you also didn't get the high over high, so the sell condition wasn't true. And since it's over the high of 2 bars ago, even though it's not last bar, the buy, remember, is from 2 bars ago, it's still a buy, so it buys again here. That's a little bit of a wonky candle. You won't run into these a lot, so if that's confusing, don't worry too much about it. And then once again, same. Another buy, volume back up, high over high again, but volume back up, buy again. High over high again. So here you got your high over high and you got descending volume. This is your topping signal for this strategy. As soon as you get descending volume, you go, okay, well, I should say, as soon as you get descending volume on a high over high candle, not like this one, you go, okay, and you exit the position. It exited the position at the close of this. So it bought 1, 2, 3, 4, 5 times and then sold at 366 for a profit of over $3,800 in this one single trade, right? And it's buying 5 times because if I come into my edit studies and I go to my global strategy settings, I have changed this to allow up to 5 entry orders in the same direction. So if the buy condition is true up to 5 times, so in that scenario, it entered 5 different $5,000 positions. It ended up in a $25,000 position by the end of it in this scenario. So you can change that to however fits your risk management and tolerance goals to however you please, but that's how I have mine currently set, and that's why it continued scaling in. So that's how that sell condition is set up, right? Oops, this is the wrong code. That's how that sell condition is set up. Your stop loss is close less than entry price. So I will show you in a second a losing trade example, and you will get to see this. So if the close is less than your entry price, go ahead and get out. Or if you're on a red candle, so if the close is less than an open, essentially if the candle is red and the close is above your entry price. So if you're not getting stopped out because it's not closing below your entry price, but you get a red candle, you also just sell. So really, any red candle, you're getting out of this position, you're getting out of this trade for your stop loss, be it the loss or be it locking in profit on the way up. So if this candle would have been red, if this candle would have closed at 321, it would have just exited at 321 and locked the profit that it had locked in at that point, right? And you'll see some of that in some of the more live examples we're going to go over right now. All right, so this was ticker SPEC, and I just want to confirm this was on January 11th, 111. So if I come down to my news and I scroll down to 111, SpectAir shares are trading higher after the company announced a strategic distribution agreement with MLab, blah, 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 blah. But you can see also on this day, remember the other necessity for this strategy to be true is that it must have news. So this stock also had news, verified trade. Let's flip through some more scenarios. AGFY on 118. If I go to 118, 118 is today. If I look back at 7:30, Agrify enters into first hydrocarbon extraction lab and vertical farming unit factory in California. Yay, yippee, it got news at 7:30. Once again, what did we talk about earlier? Top and bottom of the hour normally, right? So 7:30 being the bottom of the hour, news came out. If you were watching that scanner, you would see this stock immediately start moving. You'd be able to jump over. You'd see huge volume move on, huge price action move on. It entered. It got another price action up and volume up. It entered again. It got another price action up and volume up. It entered again. And then what happened? It got a red candle. That is your stop loss that we were just mentioning earlier, right? It got a red candle. It got stopped out of the trade. So it started buying at 174, got finished at 211, made $965 in that trade. And then it ended up going again. It tried to. This one is a little bit less. Maybe you stay away from this trade because it's not actually on the back of the news, right? Remember, this is a news strategy. You want to be trading this when the news comes out. The idea here is that you're catching the parallelism from the news, right? So maybe when this went again, you wouldn't have even been too interested in it, but just to showcase it, did get in, did immediately, so it bought this candle, ascending volume. This candle had descending volume, so it sold the close of this candle, which, look, as soon as that volume descended, that was the top of the move, at least for a while. So nice move there. Another example, SNTG. This had a move back here. This is not the real move. That's just a little secondary something. Back here had a really nice move on 12/29. Let's actually confirm it had news on that day. 12/29, why are Fisker shares trading higher? I remember why I put this on my list now. This is an example of a stock that made a move but does not have news. On 12/29, there is no company-specific news for this. So you would not have taken this trade, and maybe I should have found a better example because this is one that would have worked, but it doesn't matter. We're system traders. You don't look at this as a missed opportunity. You look at this as, I wasn't supposed to take that trade. There was no news. Do sometimes stocks not get news and they still fly? Yes, sometimes it happens. The strategy, once again, the strategy being just the code, because I can't code news calls, made $2,100. But how many times do you see a stock without news pump and then instantly dump right back down? That's what we're avoiding. You need to trade what happens most of the time when you're trading, right? And most of the time when a stock doesn't have news, that is the outcome. I maybe should have found a better example, but that's still a good working example for not being too concerned when you don't take a trade, right? Because it didn't have news. You weren't supposed to take that trade. Anyway, ZVSA on 117. Ziva Therapeutics highlights peer-reviewed article linking inflammasome activation to triple-negative breast cancer brain metastasis. You heard that bio news readout? I did pretty well there. So it has news. Started moving, increased volume, price over highs, buy, increased volume, price over highs, buy. This one is an interesting candle. You got descending volume, and you also didn't get highs. So it just didn't take an action on this candle. It was neither a buy or a sell. Obviously, then the next candle, you got huge ascending volume, price, buy. Then guess what? You got descending volume. Look at how nice this is. You got descending volume. It sold at 124, and that was the bang on peak of the move. Very often that first descending volume after a big front side move like this denotes the end of the move. That's what this strategy is doing, right? How often, at least in the beginner, and maybe you're still in this category, there's a lot of different people watching my videos, but if you are a beginner trader or when you were a beginner, how often would you miss this move and then try to trade this move? You would wait for the pullback. It'll give me a pullback. I'll enter. And then by the time it does give you a pullback, you're getting long at 114 before it rolls over to 90 cents, right? This strategy is looking to do the exact opposite of that. Actually take advantage. Are you chasing? Yeah, you are chasing, but you're chasing on the back of news. You're chasing stocks on the back of information that is actually making them go up. And does it always win? Of course not. You guys know this channel. You know how we roll. We show the losers too. So let's jump into a loser. On BFRG on 117, they got news, something about Bullfrog AI shares trade. Collaboration with Leiber Institute for Brain Development yield potentially groundbreaking biological stratification of brain expression data. Once again, look at that. Anyway, got that news? Big candle, buy. Big candle, it bought again, yes. Big candle bought again. Big candle bought again. Then it rolled over. And it rolled over so hard that this position was up nicely, got kind of cracked on. You ended up losing $400 in this trade. But guess what? That's going to happen, right? And this is very much like a lot of my strategies. It's a home run strategy. You're like, well, Trey, I mean, someone's going to look at that trade and be like, Trey, why didn't you just lock profits, man? I mean, why didn't you lock profits? You were probably up. You were probably up $900 in this trade, and instead you lost $400. How stupid are you? But how many trades did we just look through? If we go back to the big one, this trade made over $3,800, right? From adding. Think like that. Think long-term. Think, what's the best thing for your overall P&L, not just this trade P&L. And what I have found from my testing of this strategy is that the adding is the right way to go. So in this video, you got to see the full code for this strategy. If you would like to download it, once again, daytradingstrategies.net, where you can download all my strategies. There's over 13 strategies, all of my scanners, all of my studies, all in one location and all for one low price. You guys that make it to the end of my videos, I always say you all are the ones taking your day trading education seriously. You all are the ones that have the best shot to make it. I like to give you a little bit of an extra push. If you use discount code END on the website, top link in the description down below. If you use the discount code END, you're going to get access to this strategy and all of my others for only $15. So if you think this strategy, scanner, or anything else can add $15 worth of value to your trading account, check out the link in the description down below. So that's the video today. Thank you all for watching. If you made it this far, please hit the like button. You obviously did enjoy the video. And obviously, if you're not already subscribed, I'm making content like this nearly daily on this YouTube channel. So you're going to want to make sure you're subscribed so you don't miss content like this that you enjoy. With all that being said, I'm going to go ahead and sign out of this video, but I'm going to link you all to a video here of me going back over my answers from a Bloomberg interview I did 3 years ago.